Welcome to our last segment and last business decision. In this segment, we're going to talk about joints. That's right, you heard me. I said joints. That's joint products that we'll be talking about. So, what is a joint product? A joint product happens when, in some industries, two or more products known as joint products are produced from a single raw material. The point in the manufacturing process where the joint products can be recognized as a separate product is called the split-off point, and then we have to decide whether we sell the products as is on the split-off point or process them further. So as an example, if we're going to make oil, as part of the process, we take our crude oil and then we do a common production process, and then as that process is over, we're making gas. So after that process is over to convert crude oil to gas, we end up with gas, oil, and chemicals. So then the question becomes, do we sell the gas, oil, and chemicals as is, or do we process them further? So our joint costs are all the costs that are incurred prior to the split-off point. Joint costs are sunk costs. So you always want to say no to joints. That has multiple meanings, my friends. Say no to joints. Joints are a sunk cost. They're not relevant to our decision making. So the question then becomes, should we process the oil further or the chemicals further before we make our final sale? Well, the only thing that matters is the additional cost of processing it further versus the additional revenue we get from processing the item further. What's happened in the past, that is the common processes, the joint costs are irrelevant to our decision. Joint costs are traditionally allocated among different products at the split-off point, and a typical approach is to allocate them using the relative sales value. Although the allocation is needed for some purposes, such as balance sheet inventory valuation, that allocation can screw us over and make decision-making inappropriate, because if you include irrelevant costs in your decision-making, you're going to arrive at the wrong conclusion. Joint costs are irrelevant because they're not going to change based on whether we decide to process a product further or not. When we have to deal with sell or process further decisions, the only thing that matters is whether the incremental revenue, that is the increase in revenue for processing the product further, exceeds the incremental, that is increased cost of processing the product further. So let's look at an example. Sawmill cuts logs into unfinished lumber, and sawdust are the immediate joint products. So they cut logs, and then they have unfinished lumber and sawdust. Unfinished lumber is sold as is or processed further into finished lumber. Sawdust can be sold as is or processed further into presto logs. So the sales value at the split-off point for our lumber and sawdust is given $140 and $40 respectively. The sales value after further processing is $270 and $50. Our allocated joint product costs are $176 and $24, and then the cost of further processing are $50 and $20. The first thing you do in this problem is say no to joints. These joint costs are irrelevant to our decision as to whether to process the products further or not. These joint costs have already happened. They are sunk costs. We can't change them. They don't matter. If it don't change, it don't matter, my friends. So what does matter? Well, what matters is the sales value after further processing versus the sales value at the split-off point. So how much extra revenue do we generate by processing the lumber and sawdust further? Well, you could see in this calculation that if we process the lumber further, we get an extra $130 in revenue, and sawdust will get us an extra $10. To process the lumber further, it costs us an extra $50, and to process the sawdust further, it costs us an extra $20. So when all is said and done, processing the lumber further gives us an advantage of $80, but if we process the sawdust further, we lose $10. So what does that mean? It means to make the right decision, we will process the lumber further, but we will sell the sawdust as is. because we would lose money by processing it further. So the lumber should be processed further and the sawdust should be sold as is at the split off point. The key here is what we're doing is focusing on the things that change. What's the incremental revenue versus the incremental cost? And that, my friends, is what we focus on in every single decision in this chapter. What is going to change? Am I going to get more benefit or am I going to incur more cost? Doesn't matter what's happened in the past. It doesn't matter what isn't going to change. All that matters is what is different. That's why this chapter says we focus on differential revenues and differential costs, because all that matters are things that are different. If it ain't different, it's not relevant. And that brings us to the end of the chapter. As always, the only way you're going to succeed in this class is to use the additional resources that are available both on Connect and on Canvas. There's many additional practice problems, and I'm telling you that this chapter tends to be the one that gets people on the final exam, because there's not just a bunch of formulas where you shove numbers in and get an answer. You actually have to think, look at a problem, identify what's relevant and what's not, figure out what type of approach to take in order to solve the problem. It's not always super clear. You have to practice. The more practice you get, the easier it'll be to identify the type of problem you're dealing with and to identify those things that are relevant and those things that are not. That's the key to decision making as well as the key to this chapter.